Hey everybody, it's your old pal Brian Hunt. Welcome to another episode of 60 Seconds of Risk. And today I've got the very good pleasure of having my friend Eddie Bridgers with SeatonHill. Eddie, thanks for being on the show.
Hello, Brian. Appreciate it.
Good. So before we get into our topic, Eddie, why don't you tell them what SeatonHill's all about? What do you guys do?
Sure. So I'm the managing partner for SeatonHill. We are a national strategic CFO services firm. We do advisory, fractional, interim, and project-based CFO work for middle market companies, typically $5 million to $250 million in revenue. We'll do a lot of larger companies too.
Okay.
But those are usually interim roles because they probably should have a CFO, but we're stepping in to fill the gap.
Correct.
Most all of our CFOs, one thing that we specialize in, we mainly just focus in that area. So high-level controllers and CFOs. By doing that, we have veteran CFOs on our team. I'm talking 25, 30 years plus.
Yeah.
So the been there, done that gang, as I like to call them.
Good.
And, you know, guys and gals that really have a tremendous amount of M&A experience, a lot of different industry diversity experience, and we're able to match up well with our clients and meet them where they are, and don't necessarily need a full-time CFO, but they could really benefit by a fractional 30-year veteran, which otherwise they probably wouldn't be able to hire off the street.
Yeah, and I think it's a good point, Eddie, because the reason I want to talk, because you and I have chatted, know each other over the years, and I've made introductions to clients and vice versa, because as a firm grows, it gets to that point, they need some professional help. Maybe they can't get a full-time CFO, but they definitely need to get the next level. Because in the world of accounting and in surety world, we've seen like there's a joke, or not a joke, but you know, the grave, especially in the world of construction, you know, the graveyards are filled with the guys who overextended themselves. They got way too far, took on too much. And Eddie, in your perspective, when you're out there talking to construction firms, what are some of the problems, hiccups people are seeing in this market, or what is sort of the common threads you see as a maturation of a firm that financial issues can pop up?
Yeah, no, great question. And, you know, you and I have had the pleasure to, you know, talk about this a number of different times.
Yeah.
And, you know, it's been an area that, you know, I and our practice has been focused on, particularly in this market over the last 2 or 3 years, especially. You've been a great conduit with, you know, your Wednesday happy hours and a lot of the networking that we do with construction and real estate companies and so forth, the people that are in that market. Yeah. Obviously, DFW is one of the hotter marketplaces in the country,
correct,
you know, for the infrastructure and all of the development and all the people moving here. So this year in particular, we have seen, I would call it an abnormal amount of activity where we probably have signed and helping 6 to 7 or 8 clients this year.
Okay.
Every one of them have the same problem.
Yeah.
They're outgrowing their business almost to the point of bankruptcy.
Wow.
And it's a scary, sad thing to sometimes see, in that you've got owner-operators that are really good at what they do. They know how to build culture. They know how to hire people. They know how to buy trucks, you know, win bids, leverage their minority status if that's the case or not.
Yeah.
But when they get so far to where, you know, they go from $5 million to $20 million to a $40 million company, 20 million to 40 million is a big jump, right?
Yeah.
And, you know, they're thinking, well, I just landed a really big deal. Surely the bank's going to give me money because they're going to want to be a part of this ride.
Yeah.
And the banks are the ones that usually refer us in, because the banks would like to be that banker for that new client, but they ask them for their financials for the previous 9 months. They ask them for a cash flow forecast. Yeah. They ask them for a WIP that ties off with the balance sheet. Turns out the company might have multiple entities, and they don't balance out, you know, because they got all this intercompany transactions that are going on. Yeah. So we often are engaged where we want to try to help that company get back to a stable professional environment, which I think is kind of the way you poise it as well, to, you know, get to the maturity level, because they need to have those level of financials and that due diligence for a cash flow forecast that can help them not get in trouble. Because you're talking about, you know, construction, you know this. What's the unique thing about construction when it comes to bids?
Well,
from a finance standpoint.
Yeah, well, obviously, you know, there's always the potential for the low bid, you know, but that could be a bad thing.
I guess I probably shouldn't have thrown you the trick question in that regard. But it's retainage.
Oh, yeah. Retainage.
Not many other businesses are that way.
No, and that's a very good point. So I want people to understand, it's not like you get all the money up front.
Right.
It's paid out in increments, and at the end, there's still like a good chunk that's waiting until it all gets closed out.
Right.
And I think it's a lot of people don't understand that issue.
And that may be a 2 or 3 year project, right?
Yeah, exactly.
Yeah.
No, yeah. And I think to sort of wrap this up, you make a good point, and especially when I talk to people, if they're looking to grow, one of the things is depends on what they do, they have to increase their bonding capacity. Well, it's hard to get, maybe when you start off, you can get by with a credit report and maybe your tax returns past couple of years, but you want to get to the next level, then that's having solid financials, which is either reviewed or audited, which that unto itself requires a third party review it, which requires money, but then it also requires good documentation to provide to the CPA to see whether or not they can get
Otherwise, you spend way too much money with that auditor
Right.
trying to get stuff out of you that you can't produce.
Yeah, and that's where a firm like you can come in to help coach that process to get them to the next level, to be that transition from the local mom and pop shops to the $40 million GC or whatever. Maybe they can't get that full-time CFO, but they use somebody like you to help them get that next level.
Absolutely. And if you, and the real difference that we would help make in an equation is one, and hopefully this will resonate with everybody here, is rear view accounting versus windshield financial management. And what I mean by that, most companies don't see a lot of value for the back office other than paying the bills, sending the invoices, collecting the money, and staying out of jail, getting taxes done, right? But the reality of it is they need some windshield financial management. Where are you going? Do you have a cash flow forecast? Do you know what the margins are on your projects? Are you making money or are you not making money? Or do you just know that you got more money in the bank account than you got going out? Do you really know what the metrics of your business are? So we'll come in and help frame that, make sure the rearview mirror is clean and right, but give you some financial management dashboards and some other working models that'll help you make strategic decisions and drive your business successfully.
Yeah, that's a great end of it because, accounting is recording your history, but finance is projecting your future.
Amen.
Amen. And that's where guys like you can come in. So, Eddie, thank you so much. Appreciate it.
Thank you, Brian. Appreciate the time.
You bet. So, like all things, guys, I hope you found this interview beneficial. If there's a certain topic or person you'd like to see on this show, please post a note on LinkedIn. You can also subscribe to this video and all my other videos on my YouTube channel. You can find the links to these videos on the website formerly known as Twitter, Substack, Facebook, and now Blue Sky. Until next time, guys. Bye.
Thank you.